Hi everybody, and welcome back to Fang Friday. This is Ross Healy, the Chairman of Strategic Analysis Corporation and the Senior Portfolio Manager at McNichol & Associates Asset Management. Now, before we take a close look at the SVA charts, as always, I do like to say thanks to everyone who likes this video and all our subscribers. If you are a viewer and have not yet subscribed, just click on the red subscribe button below the video. As a reminder, I will be appearing on BNN at noon on July the 5th, 3 weeks from now, so mark it in your calendar. It may be too much to ask for, but gosh, I would like it to be live and in person at the BNN studio. I guess we're going to see what Mr. Ford allows us to do. Now, in contemplating the overall market, the S&P is still trying to break out above its May highs. It's close, but it hasn't broken out yet. I think that it will make it, and at least 3 of the Fangs seem to agree, as they are pushing above those May highs as well. The rest, however, seem stuck in a sort of ennui. I would suspect that as the S&P reaches our upside target, its low super growth price, or 4.5 times book, which, by the way, also happens to be the valuation high set way back at the peak of the market in 2000, that they may overcome their lethargy and rebound somewhat. But some of them look tired to me, having carried the market leadership burden for so long. Anyway, let's look at those Fangs. First one is Alphabet, and of course, I would almost say my favorite stock, a wonderful trading stock, but one that has broken out above its mid-super growth price, 5.5 times book, and seems for sure to be heading to its bubble price. That's very, very nice to see. Facebook, same thing. Note the highs of Facebook back in July of 2018 and again in September of 2020. I think that the bubble price is coming up and possibly coming up fairly soon. Microsoft, how can we say about Microsoft? It just continues to sort of dawdle along its HB2 price. That's 12 times book value. It's nothing like, going back to 2019 when we first began to do the Fang Friday webinars. Here you can see that Microsoft held up against its HB1, held up, and then finally broke out and had a good move. Well, the second time that it got to the next highest break point, it's been sort of back and forth, what we call sloppy trading. Now, since it continues to move along the HB2, I think we have to include it and in the portfolio, and of course it's been growing at about 13-14% a year, so it beats cash at the present time. NVDA is an interesting situation, and NVIDIA, after setting back to its HB3, remember, we got a nice buy, it roared up to its HB4, we took a sell, it set back, but it didn't set back all the way, and then it turned around and has recently broken out over its HB4 price. And that is interesting because that was the peak of NVIDIA in the period 2017 and 2018. And the question now before the House is, can this actually break out? Well, last week we took a look at a couple of stocks, Intel and Micron Technology, and I'm going to go back and review Micron again, because what's happened since last week is that Micron has actually broken back below its growth price. That's 2 times book value, despite that great strength in the earnings outlook and therefore the fair market value. And the question, of course, is what's going on? Well, let's go and take a look at the past 10 years of Micron, and now we see a very interesting sort of pattern, as it were, sort of forming. The first big run that Micron took in 2013-14, with those, and of course see those earnings and the fair market value soaring, it carried the stock all the way to its super growth price. That's 3.5 times book value. But then those earnings and the semi-cycle turned down, and the stock really got hammered from, look at that, from all the way from 3.5 times book to 0.8 times book. That's quite a loss. Well, the second time that we've got that semi-cycle, Micron, of course, turned around again and had a beautiful run, but this time, despite the fact that the fair market value was actually higher relative to the super growth price than the last time, the market only carried the stock to its mid-growth price. That's 2.5 times book value. Tried there 3 times and then set back. Well, this is now the third semi-cycle in this past decade, and it looks very much to me, despite the great strength in the earnings and the fair market value, that the stock may be running out of gas. It's very useful to be able to have this kind of history behind us, because it begs the question, is the breakout of NVIDIA over its HB4, is that for real or is that temporary? The history would say be very careful what you're expecting. Netflix, it just continues to drift, doesn't it? And indeed drift lower. Again, you know, I don't like this stock very much, and I think that that this stock is old and tired and wants to be much lower. Apple, very much the same way. You know, they had that spectacular first quarter, but the expectations for the next couple of years are for growth that's around 4%. Well, 4% doesn't exactly call for a price to book of 26 times, which would be the HB5, and I expect actually that the stock will work lower. Finally, we take a look at Amazon, and let me just put my cursor here, and what you can see here is if we were doing standard technical analysis and you didn't see any of the SVA lines, that there is a sort of a peak on that stock that's just below currently the HB3 price of about 3,600. Well, I could see, based on recent history, mainly the rally from below that level back to that trend line, if you like, that we might do the same thing again. But it looks very, very much to me as if in the long term that the sort of the oomph that the valuation is coming out of Amazon, and we may see a drift to lower and lower valuations over time. Well, in summary, Alphabet and Facebook are breaking out towards their respective bubble prices, which should be easy targets to achieve. Microsoft is holding in nicely, if a little sloppily, at and above its HB2 price, or 12 times book. They're all safely in what I call my Phantom Fang portfolio. NVIDIA remains a bit of a conundrum. It's broken out over the HB4 or 20 times book and has checked back, as I have said to you many times over the past years to expect. And normally, I would be putting it in my Fang portfolio. My problem is that it has done this several times recently, and it has always failed to hold the HB4 valuation. And a look at Micron technology tells me why. I'm not sure that the market trusts the semis this cycle around. Now, NVIDIA, of course, has its own special reason to be firm, and that is the Bitcoin phenomenon. My own concerns center around what happens when Bitcoin really bites the dust. Sorry, of course I meant if Bitcoin really bites the dust. Slip of the tongue there. Netflix continues to ooze lower. Nothing flashy or alarming here, just a steady loss of air seeping out of this balloon. Apple has confirmed its sell signal, and I would be patient here, as those future earnings forecasts do not suggest that a big rebound in valuation is even possible. Finally, Amazon is also marking time between breakpoints following our sell some while ago. And even if it can rally from here, the visible upside is not that interesting. Now, what are your takeaways for this week? First and foremost, as the sell in May syndrome kind of fades away, I think that the dull market is resolving itself to the upside, which remains decently positive from here. Even if overall values are extended, as any number of pundits and commentators will undoubtedly warn you, our index charts show us that we've been here before and that more is possible at this juncture. Second, as I discussed last week, the upside potential for the Fang stocks is muted compared to the S&P 500. We've highlighted other areas of the market for our clients where we would rather be than here, and I suspect that the Fangs as a group may be a bit of a drag on overall portfolio performance. One thing that I trust that I have thoroughly underlined this week, however, is that it is very useful to have good access to market history if you really want to understand what is going on, whether it's a sound overview of market history or a close-in look at what makes an individual stock tick, as we saw with Micron. Having SVA to help with your portfolio decisions can provide you with insights that other services simply cannot offer. So, if you're not a client, but want to take that next step in your personal investment journey, send us an email at info@strategicanalysis.ca. Tell us where you are, and we will see if our service can help you get to that next stage. Anyway, for now, this has been Ross Healy, the chairman of Strategic Analysis Corporation and a senior portfolio manager at McNichol & Associates Asset Management, reminding you that nothing, including investing, is difficult if you have the right tools. I'll see you next Friday.